It's a NASDAQ story once again, going the opposite direction of how most of last week went. NASDAQ's up 1.5%. So it's a nice gain there. So stocks are up. Bitcoin is rebounding. Gold is higher. Weiss, tech stocks suffered their worst week since the Liberation Day sell-off. $800 billion worth of market cap was wiped last week. We have a chart to show you the major companies which saw the big sell-off: NVIDIA, Microsoft, Broadcom, Oracle, Meta, Palantir, Alphabet, Amazon, the ones that are really in the wheelhouse of what we've been talking about. Palantir was down 11%. Do we sort of get back on track now after a little bit of a shakeout? Because that's how it's been.
Yep.
Investors haven't let these stocks slide all that far. They've come in and bought them.
Yeah, and you take a look at Meta, and that's obviously because they announced increased spending, CapEx spending, which I'm glad to see, because you can't buy when all the usage case, as a company, you can't buy, you can't invest when all the use cases are apparent from AI. So I prefer them to get in front of it. Now, in terms of, I don't think we're done with the volatility. So this is a momentary respite. I was looking for some good news, and that, of course, is the belief that that government's going to open again. But look, there's still, Meta's not overvalued here. I think Meta is actually extremely attractive here, and I had bought some for a trade and caught a falling knife. But look, the fundamentals are still extremely strong. These are not the companies that are impacted by the slowdown, by the government shutdown. So I think it's going to be game back on. Now, I don't think it's game back on right now. I don't know if it's within the next month,
I mean, it looks
which is going to the year end.
It looks like it's game back on today, right? And NVIDIA's up about 4%, Alphabet 2.5%. Yep. You have Meta is obviously higher, and then most of these stocks, Jim, are higher as well.
Well, I'll just finish. I think if one does recover and rally into year end, it will be Meta. The others are just normal corrections, normal sell-offs, not a big deal.
Well, I mean, some cases, yeah, correction. I mean, Meta's down 22% off its most recent 52-week high. NVIDIA down 11.5%. Right. Microsoft's been down 10.5%. Jim, you own NVIDIA, you own Microsoft, you own Amazon, you own Alphabet, and of course you own Apple as well. So is this trade now back? This is just how it works. You get a little bit of a shakeout. You have to buy the dip. Because, again, investors aren't going to let these go down too far.
Yeah, in my opinion, the fundamentals, as Steve just said, are very much intact for the AI trade. I don't think this is a bubble. I don't think the valuations are out of sight either. And, I spent some time over the weekend thinking about something that I said on Friday, and I'm going to repeat it, which is that I do think the swoon in the market, in the AI sector in particular, has been caused by liquidity issues that stem directly from the government shutdown. The fact that so much money is at the Federal Reserve and the Treasury General account, the fact that the Treasury is not paying that money out through the commercial banking system to contractors and employees has decreased liquidity. You see it in SOFR volatility, secured overnight financing rate. Now, I know this is a little esoteric, but I'm telling you this is important. SOFR volatility in a highly leveraged financial system like we've got, think about basis trades, think about multi-strat, that has an effect. And now that the government shutdown is coming to an end, you'll start to see liquidity start to pick up, and it will support these stocks that got hit simply because, let me just finish the last thought.
Don't say simply because. See, that's where you're going to go off the rails.
No,
I was with you for a minute.
Well, let me see if
simply because the government was closed, the train has just lost a wheel.
Well, let me see if I can put the wheel back on, okay? Because when we talk about things, liquidity, highly leveraged financial system, and de-risking, we're talking about institutions selling the stock market. And where are they going to sell? 40% of the S&P 500 is in the top 10 names, which is predominantly AI.
Understood, but you're making this assumption, not taking into account, I would argue, you just had earnings from all these companies. It's not like it's not like there was nothing going on and the whole market came down because they were all of a sudden concerned with the government shutdown, right? Meta startled some people with their earnings report.
I think Meta is idiosyncratic.
And the amount of money they're spending. Palantir startled some with the valuation question. So it's not like there was nothing else that investors had to really focus on.
This earnings season should be supportive of the stock market. Should have been. You've got over 80% of companies reporting having beat. We came into the quarter thinking that year-over-year growth would be 8%. Now it's 13%. If you look at reports from Microsoft, from Qualcomm, from any of a number of stocks that outreported, and by the way, their estimates are now going up, so it wasn't that the guidance disappointed.
I get that.
Yet the stocks went down.
But you can't cherry cherry pick one and say, well, it's idiosyncratic because it doesn't fit your narrative. Like Meta going down and then declaring declaring it to be idiosyncratic when that's the one that raised the question for a whole number of other names on the amount of money that's being spent and what they're getting in return.
Before Steve goes, I'm just going to summarize
what the end game is going to be.
I'm going to summarize this so everybody knows it, including you, Steve. My position, feel free to disagree with it, is that the downturn over the last 2 weeks has been about liquidity flows, not about fundamentals.
Okay. In terms of the earnings...
Can you go quick? Because there's two other people that I'd like to hear
In terms of the earnings period, nobody thought it was going to be 8%. Everybody thought, including everybody that ever sat in this desk, that was going to be better than expected. That's what we got. So you can't say the market ignored it. It just pulled it forward. Estimates are going higher from here, whether it's the S&P 500 or Microsoft or Qualcomm, you name it.
Name?
Lot to unpack here.
Good, unpack it.
So
unpack it. The table's yours.
In terms of the AI trade, I think we've moved into a different phase of it. The first phase of AI was fueled by capital coming from cash flow. Now we're in a phase fueled by debt, and all the companies are issuing debt. So we're closer to the D-Day, in my opinion, of when you actually have to see the results. And we're clearly not seeing the results from AI as a revenue stream. It is a revenue stream for the cloud companies, but it's not a revenue stream for the pure play AI companies like OpenAI, in my opinion, yet. I was reading a report on the way up here this morning, and somebody said, if you give away cards for free, you're going to have a shortage of cards. So you're basically giving away AI for free, so it's not surprising that demand is outstripping supply. And right now, cash flows and bond investors are willing to finance that, and that money's going to the cloud companies, which is why you're seeing Amazon and Google do so well and everybody else kind of not do so well. So I think we are getting to the point where you have to watch is when bond investors all of a sudden say, no more. I actually want to see, I'm not going to give you the debt and the capital to fund this CapEx boom. Almost all CapEx booms ends badly. It's just a question of when.
Okay. So great points to further be discussed in a moment.
Okay.
Because it's relevant to another debate that we had late last week with Jim and Steve, the amount of debt financing being done, and the prevailing thought, I think, here was no big deal.
No big deal
at these levels.
Yes, yeah.
And we had a debate. And we'll get back to it in a minute because there are stocks that are moving today and ones that are in the conversation on the street for the very topic that you raised. But, Sarat, I want your view first.
So, I agree with Jim, but I also think in addition to liquidity, when you see the government slow down and you start seeing where it's affecting, which is the consumer and the K-shaped economy, so the market does get reactive to that. So the news today, if we go through and we don't have a shutdown, is positive, but the market then starts discounting it really fast to saying, hey, the slower part of the economy is slowing even faster. Fed can't really do anything until later. Then what do you do? And I think that's when you get these powerful moves in the market. And to Steve's point, they can be huge on the up and the down. So we're going to get some volatility until all this gets resolved.